Hello, it's Cryptolyze. I hope you are well this Wednesday, 13 September 2023. It is with pleasure that we meet today to talk about ALEPH ZERO. It's a somewhat special project, and we're going to come back to it. As usual, we will dissect this video into two parts. A fundamental part in which we will explain the project, reviews its current events, and a technical part where we will project short, medium, long-term on purchase prices, sales prices with precisely from the AT, and it starts right away. What is ALEPH ZERO? ALEPH ZERO is a level 1 blockchain, so it is an infrastructure blockchain which aims to provide developers with tools to be able to build decentralized applications on their own protocol. So we must understand that ALEPH ZERO was built in the Ethereum killer wave. We are really in this area, that is to say that the goal of ALEPH ZERO is to be a level 1 blockchain, which is secure, scalable, and which does not have the problems that can be found on Ethereum. And it's very interesting because we are really in this process, but at the same time, we are a little apart. Because the real target of ALEPH ZERO is not traditional users, it is rather small businesses. It's really something that is intended to be used by small companies to be able to offer services or microservices directly to users. So we are really in an approach that is different from the rest. And that is why it was born in Ethereum Killer. But I cannot consider it to be a form of Ethereum Killer. The other point to note is that we are in a dimension where ALEPH ZERO has built its blockchain on the notion of zero knowledge proof. This is really the very principle. It is that in their construction and in the establishment of their blockchain, we say blockchain, but behind it is a DAG. This is what we find, for example, at Phantom or things like that, in which we are in a complicated construction of blocks, which is sometimes asynchronous, which is precisely also the case of ALEPH ZERO and from Phantom 2. And we are in a dimension where we want to build smart contracts that rely on zero knowledge proof to be able to maintain privacy while maintaining the notion of scalability. To give you an idea in terms of scalability, we are around 80 zero transactions per second. In any case, it was during the test that I believe they reached 89 zero exactly. But we are around an average of 80 zero without forcing. So we are really in something that is hyper scalable. We are in something that is relatively data protection with zero knowledge proof. The technology itself, I talk to you about it regularly. It is what allows us to prove something of mathematically and cryptographically without necessarily knowing this something, nor knowing whether it is true or false. This is really the strength of zero knowledge proof. It allows you to maintain the privacy of data while validating something. And the fact of having a blockchain that relies on the knowledge proof site to really build absolutely everything is really something that is relatively strong. Is this the only one? No, we have projects like Aztec, which are being built. We have projects like Secret, which is a bit different. We can have projects like Rose, and therefore the Oasis token, in which they have an enclave, which is secure. So we have identical ideas, but methodologies, which are still different. We can also have why we can talk about Starknet, which is in fact in this conception of building a rollup, which is based on the ZK knowledge directly natively. And ALEPH ZERO is one solution among many others. For me, the problem is that we don't yet have many validators. Decentralization is not there. We are at 126. It varies. It fluctuates. We have quite few validators, but I think it will increase over time. We also have very few accounts, but which is rather logical, given that it is a blockchain which was born globally during the bear market in 2022. So 2021 minus 2022. That's something who did an SEO, who raised more than $10 million. I think it's 16 at the top. So we are in a project which was generally built at the end of the bull market and at the beginning of the bear market. So we are in a dimension that is different from other blockchains that we have experienced with fundraising. Monumental and a very strong price acceleration during 2021, and then we collapse. Here we are in something which is much more constructed. We will see it later in terms of the course. On the other hand, at the level of applications and therefore of the ecosystem, we are really in something which is relatively weak. When we look at the list, we will see that we are in something where we have applications, but we have very little volume. We have very few pure developers who are specialized. In ALEPH ZERO, we are in a dynamic that is still different, but which is normal because the project itself is under construction. On the other hand, what is important to note is that behind us, we are on a finality, which is less than a second away, and that is really very strong. It means that the block itself will be validated and frozen in less than a second, something that many other blockchains have great difficulty doing, especially with fees, which are very, very low. Talking about 0.3 to 0, we are really in a very sharp reduction in costs. On the other hand, as always, when we have high scalability plus very low fees, that's what we want from a blockchain. We agree. But that also implies that it will potentially be attackable through civil attacks. That is to say, the fact of being able to spam, for example, the blockchain and saturate it. Is this going to be something that will be protected or not? We don't have any information on that yet. They haven't had an attack yet because there has little overall interest in doing so for the moment, but we are in a project which is promising, but which still has many areas of questioning. They have $50 million in incentives to be able to build applications. So they still have a big incentive pulse on it. I think there will be a new pool that will be created when there is the bull run. And next to it, we have the INC. The INC is their programming language, which is made available to program on ALEPH ZERO, okay? So we are not going to program in Solidity, something we are used to having. We are going to have a language that will be separate, in which we will absolutely have to learn. Otherwise, we have WASM, which is more like WebAssembly, which is rather usual, which we find on many other blockchains. But what is important to understand is that ALEPH ZERO is built in Rust. So exactly in Substrate, which is the same technology as Polkadot, which is based on Rust. So something which is very solid. The goal is to have a layer that is solid, functional, and behind it to have an overlay of simplification through the INC. Why not? INC could be something pretty cool to build on, but again, that means developers have to learn a new language and do more than just learn it. Actually master it to be able to avoid having flaws, because obviously when we have a new blockchain, that also implies that we are going to have new flaws, which are likely to appear because we are going to have a functionality that will be different, etc., etc. So before tackling Token MX, I would just like to quickly summarize the ALEPH ZERO. For me, it is a project which is interesting, which offers real added value. It is not the only one on it, and we still have some uncertainties on the notion of ecosystem and its capacity to be able to attract users, and in particular SMEs, namely that we are not yet in a phase of adhesion of the blockchain and SMEs in itself, although it is Fabric, very important global economy that does not prevent. They are generally the last to get into new technologies. And to explain that to you a little bit, it is generally already complicated to even get into the simple digitization, okay, of documents. So for me, we are still very, very far from that. But indeed, it is a project that could be very interesting to follow. In terms of tokenomics, we have something that is inflationary. Even if the generation of AZERO will systematically decrease, we are still in something which is inflationary. We are on a small market cap of 250 million diluted. So here we are at 266 out of 336. So we are really diluted on a small market cap. So we has a relatively high possibility of development, provided, of course, that we have membership and that we have applications that we have an interest in using and developing precisely at F0. We will finish in the fundamental part. We will attack the technical part. So the technical part is a little more complicated than usual because I haven't managed to find a graph that is approximately correct. I had to rely on here the Qcoin chart and then the coin market cap chart to take the highs and lows and be able to restructure. So we're going to keep the two together. I marked the high here, I marked the low there, and we see that we are more or less in this dynamic here. We will rather place ourselves like this just to have a good vision, to know approximately where we are there on the fall. So we are no longer on this force of acceleration in this fall that we have. So we are in an approach here which is more in a distribution. We see clearly that we have a BC, an AR here, an ST, then the ST can be here, and overall what we're going to expect in a wake-up distribution, what is it? It's a sign-off speed. So a low, so for me, we're going to break them here, this low there, so we're going to break them the 0.59 to potentially then structure an accumulation. There we still have a nice range zone, which has been since June 2022 until now, in which we have still made a nice acceleration with a very big breadth over December, November, December, which is rather classic, and a second acceleration that we saw until March, in which we had an increase in volumes, which is rather classic compared to precisely the acceleration of BTC, which we had at the beginning 2023. And then we have a stabilization, a decline. Volume, which is still very, very strong, and this drop in volume is very similar to what we experienced during this zone. So for the moment, we will continue to sink slightly to arrive at the end of the year, which will break the 0.59 here, something which will be done in this way before being able to structure an accumulation. But what I want, and what I really want in the accumulation, is to actually have a lot which will be structured like this. We will make a small profit again, we will break the previous lots, we'll restructure, we'll retest, and then we'll leave. There I will have a signal to tell me that I have a reversal structure in which we will indeed have an end of dilution of the token and an end here of the bearish pressure. We must understand that we are on a project which is relatively early, in which we have quite little use of the token, in which there are quite few costs because there is quite little volume. There has relatively few applications, so we don't have something that is profitable. So obviously we have a dilution of the token to allow the profitability of the project and to be able to continue to develop. They have a roadmap which is relatively substantial, but that also implies that we will have pressure, bearish trend, which will be relatively substantial to allow the evolution of this roadmap. So for me, it is imperative to have this structure to be able to say that we will have an entry to say, yes, we will pay perhaps a little more than those who have won the prizes. But at least we know that the structure will be validated, and we know that we will have something that will start to rise again, so we will have an incentive to push. So the same, we'll have to watch the news. Yes or no? Are there protocols or big signatures that are being put in place in which we will have volume that will be drained? If not, well, we know we'll have something that will continue to dilute. So you have to wait for me and actually have an interesting area. So for me, the interesting zone is already below the 0.59 to then have a structure. And then once we have a structure, we can consider that we are in a pattern, which is interesting. So we're going to say that the express zone is in this zone. And besides, I'm going to note it here. I'll put it back a little later. What can we set as a target? It's a bit complicated because for me, we don't yet have the batch that is present. So I can't determine that it's wave 1, wave 2 for the moment, so we're still in something that is undetermined. But I tend to tell you that we can quite easily retest here the ST, which was carried out around the $2, and we could quite easily also retest the upper part, so the $6. This would clearly bring us to a market cap, which could make why not X10, so go for the $7, in which we would go to a market cap of $3 billion. $3 billion for a level 1 blockchain in the middle of a bull run with applications seems entirely legitimate to me in terms of evolution. However, it is imperative that we have a bull run, that we have a liquidity contribution, and that we have behind a sufficient incentive to actually bring speculation into play. If we don't have speculation, we won't have liquidity injection because right now the protocol itself is under construction, and I think it won't be finished before the bull run starts. So there must be this whole approach which comes into account. So it is important to take it into consideration because, yes, we can have prospects of return, but who says return says risk? It is classic. The more we have return, the more risk we have. So are we capable of taking as much risk, and in what proportion? Always pay attention to your exposure. I hope you like this video. If so, don't forget to leave me a little like. It always makes me very happy. And I am sure that you will appreciate the video that I made yesterday on CKB, the crypto of Nervos Network, in which we have a project which aims to be total, in which it has layer 0, layer 1, layer 2, all monolithic. You have to understand why it is interesting. What are the limits of this project? And I'll put the link there, and we'll see you tomorrow at 7 p.m.